The first thing you need to understand about market manipulation, kid, is that it's rarely some shadowy villain pulling levers behind the curtain the way movies like to show it. Because most of what people call manipulation is really just the natural consequence of liquidity fear and human behavior colliding in predictable ways. And I didn't grasp that until the market trapped me enough times to force the lesson into my bones. Early on, I thought traps were accidents, bad luck moments, where I entered a perfectly logical trade, only to watch price reverse the instant I got involved. And for a long time, I told myself the market was out to get me, when the truth was far less dramatic and far more uncomfortable. I was walking into the same obvious areas as everyone else, thinking I was being smart, while advertising my intentions to anyone with deeper pockets and more patience. My first real encounter with a trap came during a breakout that looked flawless on every technical level. Price had compressed for days, volume was rising, momentum indicators were lining up, and every trading book I had read whispered the same promise. This thing was ready to explode. I entered the moment it broke, confident, almost relieved, to finally catch a clean move, and within minutes, price snapped back inside the range, then kept falling methodically, painfully stopping out anyone who had chased the breakout with the same certainty I had. At the time, I called it manipulation. Later, I learned to call it liquidity. Breakouts are not just signals, they are invitations, and every invitation attracts a crowd. That crowd places stops in predictable places, clusters orders at obvious levels, and creates the very fuel larger players need to enter or exit positions. The market didn't trick me, it used me. And it will do the same to anyone who confuses visibility with opportunity. Over time, I began to notice patterns in how traps form. Price doesn't usually reverse violently out of nowhere. It tempts first. It accelerates just enough to trigger fear of missing out. It confirms just enough to silence doubt. That extra push is where most retail traders commit fully increased size, abandon caution. And that's when the door quietly closes behind them. I learned to watch, not just where price was going, but how it got there. Was the move smooth or desperate? Did candles close strong or leave long wicks behind? Did volume expand with progress or spike as price stalled? These details mattered more than any pattern name. One of the most valuable lessons came from studying false breakdowns during market fear. Price would dip below obvious support, triggering panic sells. Headlines would turn, bearish sentiment would collapse, and then slowly, deliberately, price would reclaim the level and grind higher, while most traders sat frozen, convinced the move wasn't real. That wasn't manipulation in the conspiratorial sense. It was the market transferring risk from emotional hands to patient ones. The trap wasn't the move itself, it was the story people told themselves while it happened. The market exploits certainty, not ignorance. The more obvious a setup feels, the more cautious you should become. I learned that traps are built on consensus. When everyone agrees on direction, the risk isn't that they're wrong, it's that they're early overexposed and emotionally committed. Avoiding traps didn't require me to predict manipulation. It required me to stop participating where outcomes depended on immediate follow-through. I stopped chasing strength and started waiting for acceptance. I stopped trading the first move and focused on the second. I learned that real moves don't need to convince you quickly. They allow time, pull back, test commitment. Traps rush you. They demand urgency. They punish hesitation. The market uses speed as a weapon against impatience. Another hard-earned lesson was understanding news-based traps. Headlines don't move markets. Positioning does. News often provides the excuse, not the cause. I watched price rally on bad news and fall on good news so many times that I've finally accepted the truth. If price doesn't react the way the story says it should, the story is irrelevant. The trap is believing narratives instead of observing behavior. Over decades, through dot-com euphoria, 2008, panic, and the chaos of COVID, I saw the same mechanics repeat under different costumes. Stops get hunted where they cluster. Breakouts fail when participation peaks too quickly. Reversals begin when fear or greed becomes unanimous. And the traders who survive aren't the ones who see manipulation everywhere. They're the ones who stop offering themselves as easy liquidity. I learned to trade smaller and obvious zones, to wait for confirmation after extremes, to accept missing moves rather than chasing them, and to treat sudden clarity as a warning sign instead of a green light. Spotting traps became less about cleverness and more about humility. The market isn't trying to fool you personally. It's responding to order flow, and if your behavior matches the crowd at emotional extremes, you're standing exactly where pressure will be released. And the most important realization of all was this: you can't avoid every trap, but you can design your behavior so traps don't destroy you. Smaller size, wider context, patience after emotional moves. These aren't defensive tactics. They're survival skills. Once I accepted that traps are a feature, not a flaw of how markets function, I stopped feeling hunted and started feeling alert. The market didn't change. I did. And that shift from feeling targeted to understanding structure is the difference between a trader who keeps blaming manipulation and one who learns to operate around it, because the market will always test where conviction turns into vulnerability. And the only real defense is learning to recognize when you're being invited to act before you've been given enough information. Because those invitations are rarely gifts, they're filters. And once you see that clearly, you stop asking who's manipulating the market and start asking whether you're about to step into a situation designed to turn your urgency into their advantage. Because once you see traps for what they are, mechanisms for transferring risk from the impatient to the prepared, you stop trying to outsmart the market and start refusing to be rushed by it. In the later years of my career, I noticed that the cleanest way to avoid traps wasn't to identify every trick, but to change the conditions under which I was willing to act. If a move required immediate commitment, perfect timing, or emotional certainty, I passed. If price needed me to believe right now, I waited. That simple shift filtered out more bad trades than any pattern ever did. I learned to let the first move go to watch how price behaved after the obvious stops were taken, after the headlines had done their damage, after the crowd had committed. Real moves don't mind being retested. Real accumulation doesn't announce itself with drama. It reveals itself through patience, through price holding where it shouldn't, through the market refusing to follow the script everyone expects. I also learned that the most dangerous traps are internal. Fear that makes you sell the low. Greed that makes you chase the high. The need to be involved that turns noise into opportunity. External manipulation only works when it aligns with an internal weakness, and once I accepted that responsibility shifted back where it belonged, I stopped blaming the market for doing what markets have always done and focused on tightening my own behavior, trading smaller, near obvious levels, demanding confirmation instead of anticipation, and accepting that missing a move is always cheaper than being trapped in the wrong one. Over time, this approach changed my emotional relationship with price. Sudden spikes stopped exciting me. Violent moves stopped intimidating me. They became signals to slow down, not speed up. And that calm awareness was the real edge. The market will always run liquidity plays. It will always exploit consensus. It will always test where confidence turns into exposure. But if you learn to recognize urgency as a warning, clarity as suspicious, and patience as protection, traps lose their power to surprise you.